Hello class, this is your audio lesson for week 3. This week we're going to be talking about budgeting and internal controls. So I wanted to go over budgeting with you and then show you a short video on how to use a budget in QuickBooks. By definition, a budget is an estimate of income and expenditure for a set period of time. By this we usually mean on a month-to-month basis and for the whole year. So you'd be creating a budget at the beginning of your fiscal year. You'd be laying out your various revenue sources, your various expenditures, and hopefully your net income month over month for 12 months. All right, budgeting. You got choices when you have a business. You can basically wait to see what the eventual financial results are and then try to figure out a plan for next month. Or a better method would be to create a budget where you're looking ahead for the entire 12 months and coming up with a plan. The thing to keep in mind is budgeting is a financial planning tool, okay? And as a tool, it's something you're going to continue to use throughout the course of the entire year. All right, so modeling. Basically, managers in an organization, they need to have a map. Okay, this map is designed to help them with their decision making. If they have a budget and they know that the budget calls for a certain level of revenue, then they can make plans about achieving that particular revenue. A good model requires you to have not only a plan for profit, expenses, revenue, but also cash flow. Okay, that's critical. Without cash flow, your business is going to basically dry up and fold. The model, for all intents and purposes, you can consider it a blueprint or a roadmap. It's basically your plan on how you're going to get from here to the end of the year and achieve your strategic goals. You're going to have to come up with a budget for not only the profit and loss statement and statement of cash flow, but for the balance sheet as well. In QuickBooks Online Plus, you're able to create a budget for the profit and loss, but you cannot create a budget for the balance sheet or cash flow. So, the planning part to this. We know what a model is, but the planning aspect really does several things. Number one, it forces the managers to create a detailed plan on what they're going to achieve for the upcoming year. In order to make this thing work, you need to have very explicit financial objectives. And this basically is going to show you how to get from here to there while meeting your various strategic goals. One of the real advantages of budgeting is that it forces at least once a year for the business to sit down and clarify what they believe the point of having the business in the first place. I came from a company called Scholastic Book Fairs, and our mission statement was very simple. It was to put books into the hands of children while still making a profit. That's important to revisit your vision for your company, at least on an annual basis, to make sure that everything that you're planning on doing is to achieve that particular vision. The other big thing that comes with budgeting through the planning process is that you have various deadlines you're going to have to meet. And so this creates discipline in your management levels in order to meet those deadlines. It doesn't do you any good if your budgeting process carries on for an extended period. You got to have your budget ready to go by the first of the year. So the one aspect of budgeting that is often overlooked is the control aspect. It's great to go ahead and create a budget. You can have a wonderful spreadsheet and so forth. It lays out all your goals and all your performance levels and so forth. But you're going to have to compare the actual performance back against the budget. Failure to do that is going to cause you to miss opportunities, both for increasing your profit as well as fixing errors. One of the examples I like to give is at Scholastic Book Fairs. The monthly financial statements we sent out to our regional managers and our warehouse managers showed that particular location's performance for the month. It also showed the budget for the month, and it showed the same performance in the prior year. Same thing with the year-to-date figures. We had year-to-date performance for that location, year-to-date budget, and then year-to-date from the prior year. That allows the manager to take a look at variances to budget. Where they're unfavorable, they need to come up with a plan to get back on track. Where they are favorable, in other words, for instance, let's say your payroll expense was less than your budget, you really need to understand that as well. It may have been an error in recording the transaction, or it may mean that there was a timing issue, and in the subsequent month, you're going to have more payroll expense than what you budgeted for that month. So it's important to understand why the good things happen, as well as why the bad things happen. When you're creating a budget, you're going to come up with what's called a master budget, and it's basically just a term used to signify all the various pieces, parts that go into budgeting. You're going to have the various budgets for the balance sheet, statement of cash flow, profit and loss statement. You're also going to have a capital expenditure budget, so you know what types of equipment and fixed assets you're going to buy for the year. You also are going to need to look at, on the cash flow, when you're going to need to borrow money and when you have excess money. When you have excess money, it doesn't do very good to leave it in your checking account because it's going to earn you nothing. So you constantly want to make your extra cash work for you. So you need to know when that's going to be. Additional reasons to budget. You are forcing your management group to be better forecasters. By that I mean you're making them be thinking throughout the year as to what's been achieved, what they need to do yet, how to get back on track if they're off, and how to make the good things happen over and over again. It also helps to motivate managers and employees too, because you're providing benchmarks. Most companies have a bonus arrangement where if the management group meets certain budget requirements, then they may be bonused. Okay. Also, communication. Communication during the budgeting process is critical. In the book fair business, if the folks that were selecting the books that were going to go on to the fall book fair and the spring book fair, if they had certain ones that had a good price point and they wanted to basically promote those books, they really need to talk to the inventory people to make sure they have sufficient inventory on hand to meet the demand. Okay. Also the marketing folks. If the sales folks want to promote certain titles at the book fairs, then the marketing folks need to come up with flyers and posters and all the other stuff they need to do to advertise those particular titles. I saw a quote, and I forget exactly where it was, but I was thinking it was in the Harvard Business Review. They were talking about budgets, and they described it as sort of like writing a new business plan each year. So when you write a business plan, not only are you coming up with the numbers for the performance, but you're also looking at the assumptions that are being made. You're looking at your product line, your target market, and so forth. All those are critical components of the budgeting process as well. The process itself, you have many different ways you can do a budget. Three of the ones that come to mind are the rolling budget, static budget, and flexible budget, although there are others as well. The static budget is the one that most commonly is used in business, and it basically, during the budget process, you are creating a budget for 12 months, and you are going to stick with that for the entire year. The rolling budget is very similar. You're going to come up with initially 12 months of a budget, and then at the end of the first month, you're going to add month 13 to the end. At the end of month 2, you're going to add month 14 to the end, and so forth. The flexible budget is really 3 budgets. You're going to create a budget based on expected sales and the expenses that go with that. You're going to create a budget based on higher than expected sales, and one on lower than expected sales. Now, which method is best for you? It depends on the nature of your company. The rolling budget and the static budget are very similar, and the flexible budget gives you, just like it says, flexibility. So if you have a business that is relatively stable in terms of sales levels and so forth, You probably don't need the flexible budget. You probably can use the static or the rolling. On the other hand, if you have a business that is very varies from month to month, then you probably want to use the flexible budget because you're going to need to adjust as sales go up and sales go down and so forth. Whichever the three methods you use, there are some components you need to have. For starters, you have to have your mission statement. This is critical. You need to understand exactly what the company is trying to do. You need to lay out your objectives of the process. In other words, if you have certain goals, like we wish to increase revenue by a certain percent, or we wish to decrease expenses by a certain percent, and so forth, you need to lay those objectives out. Somebody has to take ownership of the process, and they have to organize it. They have to lay out the tools that are going to be used to complete the budget, whether it be spreadsheets or budgeting software. They have to identify who the players are going to be in the process. They have to identify the due dates that various individuals have to meet, and so forth. And once that's done, then you have to build the budget. Now, once the budget is built by the managers in the field, it gets submitted to the corporate office for review. Corporate office is probably going to push back and say, okay, your revenue is not high enough, or your expenses are too low, or excuse me, expenses are too high, and they're going to ask for some revisions. And the managers in the field are going to turn around and submit some suggested changes and so forth. So you have a give and take process until finally the budget, as the final version shows, is approved, and that's the game plan for the year. One thing to keep in mind in the control aspect is, regardless of which method you're using, you need to be aware that you need to revisit your budget on a periodic basis. Usually that's on a quarterly basis, which means that about every 3 months, you're going to go in and look at how your company has actually performed based on compared to the budget. And where you have variances, you need to identify whether or not those variances are permanent or temporary. If they're temporary variances, then you need to come up with a plan to get back on track. If the budget variances are permanent, then you need to modify your budget for the rest of the year. That's critical. As I said, I have a short video I wanted to show you, and I found it on YouTube. I did a quick search for QuickBooks Online Plus Budgeting. This is a very short video. It's 3.5 minutes. I'm going to go ahead and play it for you. I think you'll find it helpful. To do a budget in QuickBooks is incredibly simple. And for this week's assignment, what you have to do is to come up with a budget for your profit and loss statement. And depending on how you did on assignment 2, if you got a good grade on it, you only have a few errors, then you need to fix those and use QuickBooks. If for some reason you did not do well on assignment 2, then I have attached a spreadsheet to assignment 3 that shows the correct numbers for the profit and loss statement. And what you can do is simply put a column on that spreadsheet next to the first one that has the numbers, call it budget, and put a number in for each of the ones that are in the first column. The only requirement for this assignment is that the numbers for the budget and the numbers for the actual performance cannot be the same. They have to be different. Doesn't matter what they are. They can be larger or smaller than the actual number, but they do have to be different. So let me go ahead and play this video.
Complete tutorial at www.teachucomp.com/free.
Budgets let you estimate future income and expenses. QuickBooks Online Plus lets you create profit and loss budgets for fiscal years for income and expense accounts. However, note that you cannot create balance sheet budgets in QuickBooks Online Plus like you can in QuickBooks Pro. Before creating a new budget, you may want to ensure the fiscal year setting is accurate, as the budget starts at the fiscal year's first month. To check the fiscal year setting, click the Gear button and then click the Account and Settings link. Click the Advanced tab and then check the first month of fiscal year setting in the Accounting section. Adjust this setting if necessary. To create a budget, click the Gear button and then click the Budgeting link under the Tools heading. Then click the Add Budget button in the page that appears to create a new budget. In the new budget window, type a name for the budget into the name field. Use the Fiscal Year drop-down to choose the fiscal year for the budget. Use the Interval drop-down to select the time intervals to show within the budget. To pre-fill the budget with actual data if available, select the year from which to use the actual data from the Pre-fill Data drop-down. To subdivide the budget, select a choice from the Subdivide By drop-down. If you chose to subdivide your budget, the Add Subdivided Budget For drop-down lets you select for which customers, classes, or locations to subdivide the budget. This also adds a View Budget For drop-down from which you can select from the choices made in the Add Subdivided Budget For drop-down to show the choice in the budget. When finished, click the Next button in the lower right corner to continue. To edit the budget's information, click a line in the budget to edit. Then enter the budget information into the columns within the selected row. To enter the same value into all the columns to the right of a columns field, type a value into the field, and then click the Copy Across button, which looks like a right-pointing arrow in a blue circle at the right side of the field, to copy it to all the other columns fields to the right. To clear all of the field's information, click the Clear button, which looks like an X in a blue circle at the right end of the selected row. When finished, click the Save and Close button in the lower right corner of the page to show the budgets page. The list in this page shows all the budgets you have created. To edit a budget, select the Edit choice under its action column. To delete a budget, select the Delete choice under its action column. To copy an existing budget, select the Copy choice under its action column. To run a Budgets versus Actual report or a Budget Overview report, select either the Run Budgets versus Actual report or the Run Budget Overview report command from the Budgets action column.
Like what you see? Pick up your free copy of the complete tutorial at www.teachucomp.com/free.
Okay, so as the video showed you, it's pretty easy to put a budget in there. The report that you're going to have to run in order to, oops, sorry about that. The report you're going to have to run in order to submit it for the assignment is the one they indicated, the profit and loss budget versus actual. Like all the reports in QuickBooks, you run it, you export it to Excel, and that's what you're going to submit. I hope this video lesson has been helpful for you. And as usual, if you have questions, then please feel free to contact me.